If your money sits idle, you're getting poorer daily. Inflation shrinks your savings. Inflation devours your purchasing power faster than you imagine. Do not let it happen. Want to transform a small investment into a fortune without breaking a sweat?
Stay tuned. I'll reveal how to build your automatic money machine this year.
Many wonder why investing is crucial. It's not just about getting rich, but survival.
Inflation. General increase in prices. A fall in purchasing value.
Imagine, in 1980, a delicious burrito cost only a single dollar. Simple times.
Today, that same delicious burrito could easily cost you $8 or more. This isn't just about burritos. It's about your money's shrinking value. But a powerful force counteracts inflation. It's called compound interest. Think of it. Your money working tirelessly to make more money, day and night. It's like a snowball rolling downhill, growing larger and larger with each rotation. Even small amounts, over time, become incredibly substantial thanks to this magic.
The longer your money compounds, the more dramatic the growth. Time is your ally.
Don't just save your money, make it work. Harness the power of compounding. Without investment, inflation is a silent thief, eroding your savings and future.
Compound interest empowers your money to fight back, creating wealth from nothing.
The choice: let your money dwindle or make it work hard for your future.
Among all investment options, why do experts often recommend stocks?
Consider liquidity. Stocks offer unparalleled ease of buying and selling when funds are needed. Unlike real estate, selling property takes months, with significant paperwork and fees. Stocks, on the other hand, can be bought or sold in minutes, directly from your device. Another huge advantage is accessibility. You don't need millions to start investing.
Modern digital platforms make it easy for anyone, even beginners, to participate.
And let's talk about the potential returns. Historically, stocks average 8 to 10% annually. Compare that to typical savings accounts, which struggle to keep pace with inflation.
For long-term wealth building and beating inflation, stocks are a very effective tool.
Stocks offer swift liquidity, great accessibility, and powerful historical returns for investors. They empower individuals to participate in the growth of the global economy directly. Don't be intimidated. With knowledge, anyone can navigate the stock market successfully. All right, you're convinced. But how do you start? Let's discuss investment account types. First, consider retirement accounts. They are designed for your long-term financial security. A 401k, employer-sponsored, offers tax advantages and sometimes company matching. Then there's the IRA, or individual retirement arrangement, which you open yourself. Traditional and Roth IRAs exist, each with unique tax benefits. Choose wisely. Next are regular brokerage accounts. These offer more flexibility. No withdrawal restrictions. They're great for non-retirement goals, like saving for a down payment or purchases. Once you pick an account, you need a broker. These are your investment partners. When selecting a broker, consider their fee structure. Many offer commission-free trades. Look into their customer support. Is it responsive? Are they helpful for beginners? Good brokers also provide excellent educational resources to help you learn and grow. Check their investment offerings. Do they have the assets you want to buy? Fidelity is known for extensive research, robust tools, and excellent customer service. Robinhood, with its user-friendly app, is perfect for beginners and mobile trading. Charles Schwab offers many services, from trading to financial advisory. Very comprehensive. Always research and compare. Your perfect broker depends on your needs and goals. Ultimately, the best broker for you matches your specific needs, experience, goals. Choose wisely between retirement and general brokerage accounts based on your goals. With your account set up, the next question is, what should you buy? Many are tempted by individual stocks, picking the next big winner, like Apple, Nvidia. Individual stocks offer high potential, but also higher risk and volatility. This is where diversification becomes key. Don't put all your eggs in one basket. For most beginners, even seasoned investors, index funds or ETFs are superior. An ETF, exchange-traded fund, holds a basket of many different stocks or bonds. Take the S&P 500 ETF, VOO. It tracks America's 500 largest companies. This inherent diversification offers incredible safety. If one struggles, others compensate. It significantly lowers risk compared to betting on individual stocks, reducing volatility. Historically, the S&P 500 has consistently provided robust long-term growth for investors. It requires less research and active management. It's a simpler, smarter investment. Individual stock picking carries risks, requiring deep research and monitoring. ETFs are diversification tools, spreading your capital across many companies automatically. It's difficult for even professionals to consistently beat the market long-term. ETFs offer broad market exposure, ensuring consistent, long-term growth.
Enjoy a more hands-off approach. Let the market work while you live your life.
For steady, reliable wealth building, ETFs are your best friend. You know what to buy. But when is the best time to actually invest? Forget market timing. Time in the market beats trying to time it. The golden rule: invest as early as possible. Every day matters for compounding. If you haven't started, the second best time to invest is right now. This moment. To smooth market volatility and emotional decisions, use dollar cost averaging, or DCA. This means investing a fixed amount regularly, say $50 monthly, regardless of prices. When the market is down, your fixed amount buys more shares. A discount. When the market is up, your fixed amount buys fewer shares. It balances. This strategy reduces risk, prevents impulsive decisions, and builds wealth steadily. It takes emotion out of investing. No need to constantly check prices, just automate. Time is not just money, it's exponential. The sooner you start, the better. Delaying by just years can cost you hundreds of thousands in potential gains. Resist the urge to time the market. Consistent, disciplined investing is the winning strategy. DCA builds disciplined habits, removes emotional guesswork, and ensures steady progress. So, open that account today. Set up that recurring investment. Your future awaits. A common question is, how much money do I need to start investing effectively? The truth is, consistency far outweighs the initial amount. Start small, but always. Even $10 or $25 a week can become substantial over years. With compounding, think of cutting just one daily coffee. That saving can kickstart your investment journey. However, if your income truly prevents any saving, then invest in yourself first. Acquire new skills, get certifications, or pursue education to boost earning power. A higher income means more disposable cash to allocate to investing. Building a solid financial foundation, like an emergency fund, should precede investing.
Ensure you have a safety net. This protects you from selling investments prematurely.
Before placing any trade, understanding yourself as an investor is critical. Your risk tolerance, how much market fluctuation you can stomach, is vital. Generally, younger investors have a longer time horizon, allowing aggressive growth. Older investors, nearing retirement, prefer conservative strategies to preserve capital. Consider your financial goals, personality, and current situation when assessing risk. Invest at a level where you can sleep soundly. Comfort leads to consistency. Now, let's switch gears for a practical demonstration using the Robinhood app. We'll walk through finding a stock, understanding details, and placing different orders. First, the market order. It executes your buy or sell immediately at best price. Watch how quickly it happens. Market orders are ideal for swift trades. Next, the limit order. You set a maximum buy price or minimum sell price. This gives you more control, ensuring you don't overpay or undersell assets. Finally, recurring investments. This automates your dollar cost averaging strategy perfectly. Set your amount, frequency, and chosen asset. It handles the rest automatically. These basic tools on Robinhood make starting your investment journey straightforward. We've covered why investing is essential, combating inflation, harnessing compound interest, learned how to choose accounts, invest in ETFs, and when to start early, and understood that consistency matters more than income, and knowing your risk tolerance. This isn't just theory. It's a roadmap to financial freedom, accessible to all. Don't delay your financial future any longer. Procrastination is the costliest mistake. Take that first step today. Open an account, invest small, and begin. Your future self will thank you for taking action. Your journey starts here. You have the knowledge. Now go forth and build your legacy. Good luck.